Welcome to this week's look at the state of the New York City real estate market. This is for the week of August 5th to the 11th. We're going to be looking at what's going on in the luxury market, the Manhattan market, and the Brooklyn market. As always, if you have questions, please post them below. You can also reach out to me directly at Sotheby's. I am never too busy to help you with your real estate puzzles, problems, questions, no matter how big or small. We're going to get started now with the luxury market. There were 21 contracts signed last week. That is 7 more than the previous week. It looks like the luxury market has bounced back. And we're going to take a look now at the number 1 contract, which was the Penthouse at 1295 Madison Avenue. It was asking $19,500,000. It was reduced from $20 million when it was listed in December of 2021. This condo has 4,179 square feet. It includes 5 bedrooms, 5 bathrooms, and 2 powder rooms. It has terraces on 2 levels that total 3,114 square feet. It's in a building called The Wales, and The Wales is a former hotel by the same name that was recently converted to a 10-story, 21-unit condominium building. The amenities include a doorman, a fitness center, my favorite, a pet grooming station, bike, and private storage. 16 out of 21 units have closed, and the average price per square foot is $2,605. The number 2 contract was 19B at 211 Central Park West, asking $12,950,000. It was reduced from $14,990,000 when it was listed back in October of 2023. This co-op unit has 4 bedrooms and 4 bathrooms and a 27-foot living room, library, and primary bedroom that open onto a 14 by 59-foot terrace, which looks south over Central Park and the Natural History Museum. The amenities in this building, which is called the Beresford, and it is one of my favorite buildings, include a doorman, fitness center, and storage. Total weekly asking price sales volume, $140,069,000. Average asking price, $6,669,952. Median asking price, $5,295,000. Average discount from original ask to last asking price, 4%. Average days on the market, 323. That is it for the luxury report. We're going to move on now to Manhattan and Brooklyn. Any questions, as I said, please post them below or reach out to me directly at Sotheby's. We're continuing to see the supply falling, although not a huge amount for last week, a little over 1%. Contracts signed, we also see that falling for the week, a little over 15%, 180. Off-market, 177 properties came off the market. That is down for the week, a little over 25%. The supply for the month, 931, that is down 20%. Contract signed, 862, down a little over 13%. Off-market properties really jumped over 39%, 957. That is not unusual to be seeing the new listing inventory dropping this time of year and also the off-market properties rising. If we look at the market pulse, that's up just a smidge from last month, a smidge from last year, and we're kind of remaining in this neutral territory. 862 contracts signed over the last 30 days. That is down 10% from last month, up 2.3% from last year. Again, remaining in this kind of balanced, somewhat sideways neutral market. I thought this might be an interesting chart to share with you. Manhattan apartment monthlies, if you own versus rent. If we look at the percentage change in rent versus the apartment monthlies, it's clear that while owning is more expensive up front, it offers a higher degree of cost stability over the long run. We've been seeing the rents rising certainly this year they have really risen, and they've been rising kind of steadily overall over the last couple of years. So that has been very hard on people who are renting. And so I thought this might be an interesting chart to share with you for Manhattan. I'm going to do the same thing, of course, for Brooklyn, because I want to be sure that I'm informing you on that as well. All right, that's it for Manhattan. We're going to switch over now, take a look at what's going on in Brooklyn. Then, as I always do, I'm going to wrap this up, give you my thoughts, my strategies, so that you can be informed and continue to make great decisions. 150 properties came on the market last week in Brooklyn. That is down almost 7%. Contracts signed rose almost 19%, 133. So different than Manhattan, we saw a little pop in contract activity for the week in Brooklyn. Off-market properties, 91 for the week. That is down almost 16%. The supply for the month in Brooklyn, down almost 9%, 730. Contracts signed, 539, down almost 10% for the month. And off-market properties rose 373, up almost 29%. Again, this is not unusual this time of year. If we look at the Market Pulse reading, it is down just a little under 1% from last month, down a little over 1% from last year. We were kind of favoring the sellers there for a while, but then we kind of dropped back down. We're kind of heading back into this, looks to be a little more neutral. Again, this is a function of the balance between supply and demand. 539 contracts signed in Brooklyn over the last 30 days. We remain in this neutral market in Brooklyn. So here's this Brooklyn apartment monthlies versus rent. If we look at the percentage change in rent versus apartment monthlies in Brooklyn, it's clear here as well that while owning is more expensive upfront, renting in Brooklyn offers a higher degree of cost stability over the long run. So this is something really to be thinking about. If you're going to be living in New York City for any period of time, certainly more than a few years, let's say 5 years or longer, renting overall, unless you've just got some incredible deal, like you're in some rent control, rent stabilized situation, your cost to rent is ultimately in the hands of others. And you really might want to be thinking kind of about the long view of this for yourself. I'm always happy to kind of go over all of this with you and your circumstance in more detail and to answer any questions that you might have. But I thought this chart might be useful to some of you who've been kind of thinking about whether it's better for you to be renting or better to perhaps be thinking about buying something so that the money's going into your pocket and not someone else's. Okay, that's it for Brooklyn. I'm going to wrap this up now and give you my thoughts on how to best approach this somewhat tricky market. So, as I said, looks like the luxury market has kind of bounced back with 21 contracts signed for properties priced at $4 million and above. That's up 7 contracts from the previous week. 2 of those were at the trophy level, 10 million and above. There were 17 condos, 3 co-ops, 1 condop, no townhouses. 13 were uptown, 8 were downtown. Again, largely cash part of the market, so mortgage rates don't really seem to be affecting these guys. We did see the mortgage rates come down, and typically when we've seen the mortgage rates come down, we've also seen a bit of a pop in activity overall. I'll get into that a bit because I'm sure you're curious to know how that might have affected what happened over the last week. As you can see from the data, the Manhattan and Brooklyn conditions remain largely neutral. Why? Because this is a balance, right, between the supply and demand. The supply has kind of declined. Manhattan, we're down. Brooklyn, we are down. about 6,239 properties currently available in Manhattan, about 3,171 properties available in Brooklyn. That is about right for this time of year. We will likely continue to see those numbers decline over the next few weeks until we start to see more inventory coming back on the market in September. For the contract side, we saw in Manhattan that the contracts kind of dropped for the week, whereas in Brooklyn, we saw a rise in contract activity. Now, a week does not a trend make. However, perhaps in Brooklyn, those mortgage interest rates were more meaningful to those buyers than they were in Manhattan. But we don't 100% know for sure. We definitely saw the off-market properties kind of maybe down for the week, but for sure up for the month in both Manhattan and in Brooklyn. I would say we're going to continue to go in this kind of sideways neutral market for the remainder of the summer, if I had to guess. Looks like the luxury market is just continuing to do its own thing as it has been doing all along. Seems pretty stable. Manhattan and Brooklyn also seem to be stable, if kind of unexciting, just kind of neutral. The one thing, though, that I would encourage people to think about is this owned versus rent idea. And again, if you are someone who is maybe only going to be here for a couple of years, meaning anything less than 5 years, probably renting is the way to go. We have very high transactional costs here. And so, you may not really want to own unless you want to hold it in a portfolio and not sell when you're done using it. Then you can just rent it out, monetize it. That would be great. That's a good way to go. Otherwise, if you're going to be here 5 years or longer, you really might want to think about purchasing, because you control the costs, the money stays with you, and overall it's just a kind of a better financial decision for most than renting, because you will never see that money again. The money you pay out every month just goes away, goes to somebody else. And while you might have a nice place to live, it doesn't really, at the end of the day, do much for you other than give you a nice place to live every month, which is not nothing, but still. As always, post your questions below or directly at Sotheby's. I'm always happy to help. Never too busy for your real estate questions, problems, puzzles. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.